Alright, so the crypto market's looking rough right now. Bitcoin just dropped below 92,000, altcoins are getting wrecked, and liquidation after liquidation is wiping out traders left and right. And if you've checked your portfolio today or the past few days, yeah, it's not looking pretty. So, what's going on? Is this just another dip, or are we in for something worse? In today's video, we're going to break down exactly why the market is crashing, how Trump's new economic policies are making things worse, and, most importantly, what you should be doing right now to stay ahead of it. If you're new here, I'm Danny Lowe, and I cover everything crypto, without the hype, just straight facts. So, if you want to stay ahead of the market, make sure to subscribe and turn on notification bell so you don't miss future updates. Alright, let's get into it. So why is crypto getting crushed right now? There are a few things happening all at once, but the core of it is the combination of panic, liquidations, and broader market uncertainty spilling into crypto. Let's break it down. First, leverage is getting wiped out. A huge chunk of crypto trading is done with leverage, and when the market moves down quickly, it triggers liquidations. Those liquidations cause more selling, which triggers even more liquidations. It's a feedback loop that just keeps pushing prices lower and lower. If you've ever seen Bitcoin drop by thousands of dollars in minutes, this is usually the big suspect. And right now, there's a lot of fear in the market, which means traders aren't willing to step in and catch the falling knife. Instead, they're either panic selling or waiting on the sidelines, which makes the drop even worse. But it's not just a crypto-specific thing. Macro factors are also making this even messier. Traditional markets are shaky, and part of that comes down to Trump's new tariffs, which we'll get into more in the next segment. But the short version, markets hate uncertainty. When investors see potential trade wars, inflation concerns, and global economic shifts, riskier assets, especially crypto, tend to get dumped first. So, this isn't just about Bitcoin or altcoins, it's a broader market shakeout, and we're feeling the effects hard. But is this just the start of something worse, or just another painful but temporary correction? Let's take a closer look at how Trump's policies are fueling this market chaos. Alright, so we know the crypto market is getting hammered, but why is this happening now? A big part of the equation is Trump's new tariffs, which are sending shockwaves through the economy, and crypto is getting caught in the crossfire. Here's what's going on. Trump just announced a set of tariffs targeting imports from Canada, Mexico, and China. We're talking 25% on certain goods, 10% on others, and it's already sparking talks of retaliatory tariffs from other countries. That means global trade is about to get a lot more expensive, and when that happens, investors panic. Now, you might be thinking, okay, but what does this have to do with crypto? Well, for one, tariffs create inflation. If businesses suddenly have to pay more for imported goods, they're going to pass those costs on to consumers. That puts pressure on the economy, making the Fed less likely to cut interest rates anytime soon, which is something both traditional markets and crypto have been banking on. And this isn't the first time we've seen markets react to Trump's economic policies. Back in 2018, when Trump imposed tariffs on China, we saw a sharp correction in the stock market. The S&P 500 dropped nearly 20% in just 3 months, and investor confidence took a major hit. Crypto wasn't nearly as big back then, but Bitcoin also saw a decline around that time, partly due to the uncertainty those trade wars created. Fast forward to today, and history is almost like repeating itself. The difference? Crypto is way more integrated into global markets now, meaning it reacts faster to economic news. If traditional investors are feeling nervous, that fear spreads into Bitcoin and altcoins even quicker. On top of all this, there's the possibility that we're seeing market manipulation play a role here. A lot of major market moves tend to happen over the weekend, when liquidity is generally lower. Some traders believe that big players, whether it's institutions or market makers, are using moments like this to push prices down, liquidate over-leveraged traders, and scoop up assets at a discount. So, we're in a situation where fear is high, liquidity is low, and there's a lot of uncertainty about what happens next. But how bad is this really? Is this just a bump in the road or something much bigger? Let's take a look at some past market cycles to see what history can tell us about where we might be headed next. Alright, so the market is down bad, and fear is everywhere, but here's the thing. This isn't the first time we've seen something like this. If you've been around crypto for a while, you know these kinds of crashes tend to follow a familiar pattern. Let's rewind a little bit. Every major crypto bull run has had massive corrections along the way. Even during Bitcoin's 2020 and 2021 run, we saw multiple 30 to 50% drops before hitting new all-time highs. Same thing back in 2017. There were brutal shakeouts that had everyone convinced the bull market was over, only for Bitcoin to go on to hit new highs. And when you zoom out even further, a lot of these market-wide dumps tend to line up with macroeconomic uncertainty, just like what we're seeing now. Trade wars, inflation fears, regulatory crackdowns, we've seen these factors push crypto down before, only for the market to recover once things settle. A good example, the COVID crash in March 2020. The stock market crashed, Bitcoin dropped over 50% in a matter of days, and panic selling was everywhere. People thought the bull market was over before it even started. But within months, Bitcoin not only recovered, it kicked off one of the biggest bull runs in history. Even beyond crypto, traditional markets have seen similar reactions to tariffs and economic uncertainty. When Trump introduced tariffs during his first presidency, stocks took a hit at first, but over time, the markets adjusted and the bull run continued. So, what does this mean for us now? Well, history doesn't repeat exactly, but it does rhyme. If this follows the same pattern, we're looking at a painful but temporary correction, not the end of the bull market. That said, short-term volatility isn't going away anytime soon. We could see more downside before things stabilize, especially if there's more uncertainty around the economy or if panic continues to spread. But that's exactly why positioning yourself correctly in moments like these is so important. In the next segment, we'll talk about what you should be doing right now to prepare for the volatility ahead, without making the mistakes that wreck most traders. So, if history tells us this is more likely than not just a painful correction rather than the end of the bull market, the real question becomes is, how do you navigate this volatility without getting wrecked? First, don't panic sell. Every time the market dumps, we see the exact same pattern. People capitulate at the bottom just before things turn around. If you were bullish on Bitcoin or your altcoins a week ago, dumping everything now probably isn't the move. Second, if you're overexposed, use this as a lesson. If this dip has you losing sleep, you might have been playing with too much risk, whether that's using too much leverage, going all in on one position, or not keeping any dry powder on the side. Even in a bull market, it pays to have some capital ready in case we get deep pullbacks like this. Third, watch for signs of stabilization. Right now, the market is in full panic mode, but at some point, we'll start seeing a bottoming process, whether that's Bitcoin holding key support levels, a slowdown in liquidations, or broader market conditions improving. If you're looking for re-entry points, waiting for that stabilization makes a lot more sense than FOMOing in too early. And finally, understand that this kind of volatility is normal in crypto. If you're here for the long term, these corrections aren't something to fear, they're part of the cycle. The biggest gains usually come to people who can zoom out and think ahead rather than reacting emotionally to every dip. But there's one mistake you should absolutely want to avoid right now: chasing losses by overtrading. A lot of people try to, quote, make back their losses by jumping in and out of positions too quickly during volatile markets. More often than not, this leads to even bigger losses. Sometimes, the best move is to do nothing. Let the market settle before making your next move. That being said, we're probably not out of the woods yet, and there's still a lot that could shake up the market in the coming weeks. In the final segment, let's wrap this up talking about what to expect moving forward. Alright, so to wrap this up, yes, the market is rough right now. We've seen Bitcoin and altcoins take a hit, leverage getting wiped out, and fear spreading across the board. A big part of this comes from Trump's tariffs and the uncertainty they bring, but we've also seen market manipulation and liquidations make things worse. But if history tells us anything, this kind of panic is usually temporary. Every bull market has corrections like this, and while it's painful in the short term, it doesn't necessarily mean the cycle is over. The key is how you handle it. If you're reacting emotionally, panic selling, or getting shaken out, you're probably going to regret it later. Instead, stay informed, manage your risk, and position yourself wisely so that when the market does turn around, you're ready for it. If you found this breakdown helpful, make sure to subscribe and turn on notifications so you don't miss future updates. Also, let me know what you think in the comments. Do you think this is just a dip, Or is something bigger brewing? I'd love to hear your thoughts. That's it for today. Stay smart out there, and I'll see you in the next one.